Talk a little bit about targets. They've done the inflation target. You know, we've achieved what we wanted to and kind of sparked a bit of inflation as well. So I've got confidence that they know exactly how to play this tune, so to speak. The dollar has held below this 95 level, which is critical, and it may not be going down much. It's not going higher, so I think that's very much a positive as the macro market comes storming back.
Alan, let's talk a little bit about interest rates here, because we know slow but steady, well, continues to be the flight path, at least last we heard from the FOMC, but no real indication of change there. But if you take a look, you're going to notice we did see some signs of change from our neighbors to the north. Does the Bank of Canada's move last week to increase rates suggest that trade concerns are not as big of a deal as we've made them out to be? And what do you make of the timing with all this uncertainty? They just went ahead and raised rates regardless.
Uncertainty, that is the theme of the year. I've never been in this type of situation where we just had so many moving pieces and so many different directions and you had no idea exactly what was going to happen. It comes back to, as you and I always talk about, price. And look at what the markets have done. If you look at the stock market's, stabilized and moved higher. And I had talked about new highs by the 4th of July. I was off by about 10 days. The NASDAQ made new highs last week, and we pushed above 2,800 in the S&P, which is very significant. That should send us up to the highs once again there. And then we could be looking at 3,000 in the S&P. We've been stuck in a range between 2,600 and 2,800 for many, many, many months. And this upside breakout, and if we make new highs, a full V recovery here should be very positive. Back to the Canadian dollar. Yeah, they just did their own thing, and it's benefited their currency. Obviously, that's firmed up with the oil prices. Your last guest was very well spoken on what's happening with oil. That's very much a positive. We've had a bit of a pause, but let's remember, it was just not last Tuesday, but the Tuesday before, I think, that we made new 4-year highs in crude oil. Right. So I think the Canadians are doing what they need to do, and you're seeing the dollar not continue to move higher, and that's really the focus right now. I've been waiting for it to fall. Maybe I'm being a little bit too aggressive there, but at least it's not going up anymore.
Yeah, that move in the crude definitely something they're focused on, and maybe the increase in rates has to do with that increase in crude oil prices, because we know that their currency is so closely tied to the crude. Right. But let's talk a little bit about the yen, because we've been watching it sell off a little bit as the NASDAQ's into new all-time highs, a little less appetite for that flight to quality. But I'm also noticing that we've breached a major trend line, which goes all the way back to, it looks like, the middle of 2016. I'm curious if you think that also has something to do with the sell-off that we're seeing here recently.
I try and make it even easier than that. I think just getting below 90 has gotten everybody's attention. From a reward to risk standpoint. We might be looking at some bottoming here in the yen. We'll have to wait and see. But like you said, it hadn't been acting directly in correlation with what happened in as far as the risk and the overall volatility in the markets. But we've seen the overall trends prevail once again. You've got the VIX going straight down. We had new month-plus lows on Friday in the VIX. You're seeing the stock market move back higher. You're seeing rates stabilize and move lower. So I think a lot of things are resuming, I guess, I don't want to use the word normal, but more back to according to Hoyle as far as what you would expect the market to do. And, right now there's not a whole lot of cause for concern. So you're seeing the yen continue to drift lower. But if you look at some of the other currencies around the world, the euro right now is holding around this 117, 118 level after bottoming out a bit. So we'll have to wait for the next move. But that's the one thing that we want to focus on, is let the markets tell us. I'm not going to necessarily try and force my opinion that the dollar is going to go back down and the yen and the euro is going back above 120. But I think that's the path of least resistance right now. We'll have to see.
Alan, let's talk about that next catalyst here for the dollar, because we've got retail sales this morning headed our way. We had actually a pretty strong number, as far as I remember, last month. Came in almost up 1%. Is this the kind of number that can move the dollar, that could prompt a breach of the upper and lower extreme that we've been focused on here, or are we going to have to wait for Powell's testimony and comments there?
I think we're going to need something more significant, and I don't know what that catalyst is going to be. So we'll have to, again, wait and see. I've been patient with this dollar. waiting for it to pull back after this healthy bounce that we've seen in 2018. But you've got to put in perspective, 2017 was straight down in that dollar index. So we'll wait to see. But again, I don't think, we've talked about this before, that I don't think the Fed nor the politicians behind this want to see the dollar that much more firm. They've said it out loud before. So let's have confidence in what they've said. And looking at what's happening with the larger overall market, I think we're, again, down the path of what we've been doing over the last 7-8 years. And I look for this dollar to continue to drift lower in the longer term. Just have to be more patient than I thought I would have to be.
All right, Alan, we'll talk about this 730 number here in a minute, but I want to get your thoughts on a couple treasury markets, because we've been watching again and hearing how that flattening of the yield curve discussion is starting to come back into play. I'm wondering, are we getting any closer to a recession, or is this just sort of, again, not a major concern here for you?
That's a big call to call a recession. You know, I know the flattening yield curve, that's supposed to happen, but with the rates at these low levels, I don't think it's a typical rate situation as we stand right now. I was just in the Eurodollar pits and Eurodollar option pits on Friday, and, you know, I glance up at the boards. You don't really get the perspective unless you see, you know, they have 5 years out. Every Eurodollar options trade every quarter, obviously, for 5 years out. And you can see, once you get out to next year, it is completely flat. Absolutely, positively, within 1 or 2 ticks of each other, flat. And that really put in my mind, we know it's a flat yield curve. It is what it is. For right now. That'll change over time, but I've never seen a situation like that where you can see 5 years out and you're not seeing that staggered move that you typically see in the futures market. That's why they call it the futures, because they predict what's going to happen in the future. So the markets are telling us that there's absolutely nothing happening with rates once we get out in probably the next 6 months. They're staying exactly the same. So let's let the Fed tell us. And let's let the markets tell us where they think they're going to drive things. But right now, there's nothing happening as you get further out on that, further out in the futures for the short-term rates.
All right, let's take a look here, guys, at the ES, at the NASDAQ, the Dow, the Russell, because we just got that 730 retail sales number. And for the most part, Alan, nothing happening here either as far as real market reaction to the markets, either just trying to get waken up on a Monday morning, or has already shifted focus towards the Trump-Putin meeting and some of the other things that are impacting price activity. But let's take a look at the numbers here. A little bit lower than estimates, coming in 0.5%. And then again, the estimate was 0.6%, well below last month, 0.8%. If you take a look at the retail sales minus the autos on the month-to-month, in line with expectations, Alan, 0.4 and 0.4, again, well below last month's. But let's take a look here, guys. The autos and the gas down 0.3%, estimated down 0.4. Alan, I'm wondering if the softening of the retail sales numbers is any indication that we're starting to see some fear, concern in the consumer related to trade tariffs and just that kind of overweightedness associated with the news cycle. The gloom and doom kind of activity that we've been hearing.
Well, the consumer is definitely somewhat concerned about the trade tariff situation. But again, the market's shaking it off. And so we have to have confidence in what the market's going to be right more times than it's not. And we've been able to just shake it off. If you can bring that full circle, the retail sales translate into earnings, and earnings that we're right now in earnings season. Look at the numbers that we're seeing from the banks. Banks, billions. And look at the numbers. JP Morgan, 8 billion. Citi, 5 billion. We had Wells Fargo, 5 billion. That's profit for the quarter. This morning we come out with the Bank of America, $7 billion profit for the quarter. So that shows a lot more confidence than anything else, I think, right now. And this is going to set the tone for earnings season. And earnings growth is fantastic once again, which in turn makes stocks cheaper in relative terms, because the prices aren't moving up that significantly yet as much as the earnings are. So eventually there's going to be some catch up. So I look at that as more of a positive barometer than the retail sales numbers right now, that look at the corporate earnings and where we're going with that and that kind of strength. I think that sets a better tone. And like I said, looking for the markets to make new highs in the S&P. If we can take, once we've taken out this 2,800 level, it's up and away.
All right, well, we'll keep a close eye on Jerome Powell's speech this week. We'll also see if that can fuel the indices, as you mentioned, up, away, and if that price activity continues. Traders, this is Alan Nuckman joining us live from the floor of the Chicago Mercantile Exchange. He's the Chief Market Strategist at Agora Financial. Alan, thanks for coming on. Always a pleasure. Traders, I want to take a look.